DLocal is one of my fintech Latin American plays that I have in my portfolio. It's a company with a market cap of $3 billion. So yeah, I'm betting on it becoming much, much bigger in the future. Now, DLocal deals with emerging markets, cross-border payments and all of that. So of course, there's always risk. There will always be FX headwinds. And especially more recently, we've seen the FX headwind with New Holdings, for example. We're seeing them with DLocal. At the time of making this video, DLocal is down 18% after hours. Now, year to date, before they reported earnings, the stock was up 17%. So, okay, I guess we'll have to give back all of those gains. But all in all, for me with DLocal, it's a long-term position that I think will work out. I don't want them to be acquired because I do think that in the future, this can become a much bigger company than just $3 billion or $5 billion if someone wants to pay a premium. This is a fast-growing company that is already profitable. Plus, I trust management. Management, if you don't know, the current CEO was the ex-CFO of Mercado Libre. Now, of course, it doesn't help when you report earnings and especially a double miss, although a small one, but a double miss nonetheless. You report it when the market looks like this. The market does not like tech companies, tech stocks at the moment. So I guess AI, technology, software, cloud, and all of that is not the future. It's the past. We're going back to sticks and stones. You might not break my bones, but I'll buy the dip regardless. This is maybe Rihanna's next song. Anyways, the other things that are green are, well, the companies that you might not have expected to be green, especially not if you look at the consumer sentiment, macro news, and all of that. You would assume that these sectors would get hit as well, but no, apparently not. And so let's dive a little bit deeper. The next video will be on Rocket Lab. They also reported earnings after hours. Stock is also down, but to be honest, it was another okay quarter by them. They did what they had to do. Neutron, not mid-2025, but second half of 2025. I'll explain all of that in the Rocket Lab video. So if you enjoy this type of videos, hit all the buttons. Would really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/conscious-investor. Thank you very much. So let's start off here with the main overview. So for fiscal 24, TPV grew by 45%. In Q4, that grew by 51% year over year or 18% quarter over quarter. Revenue is up 15% year over year for fiscal year 24. Gross profit is up 6%, but adjusted EBITDA is down 7% for the whole fiscal year. For the quarter, we can see that revenue, well, continues to go up. Actually went up faster quarter over quarter than year over year. Gross profit, we continue to see that recover as well to up 20% year over year and 7% quarter over quarter. And then as for adjusted EBITDA, that's up quarter over quarter 9% and 16% year over year. Now, we look at revenue. Where does the revenue come from? Well, the majority of the revenue, of course, came from Brazil, but Brazil is down year on year. Argentina is finally up. Mexico is up as well. Chile has taken a small hit, and the other Latin American countries have done quite well in 2024 for them. So all Latin America is up despite a hit from their biggest market, which was Brazil. A small hit, but a hit nonetheless. Then looking at Africa and Asia, we can see that Nigeria took a big hit. I mean, if you look at Q4 2023, 28.4 million, Q4 2024, only 2.9 million. So yeah, when you play in those markets, there are going to be some fluctuations. But then if you look at Egypt, for example, Egypt has gone up, so year over year, a big increase. And then looking at the other African and Asian countries, that's up also. So all in all, that's the picture for revenue looking at other geographies. Then going back to TPV growth. So we can see that remittances nearly doubled year on year, driven by successful commercial efforts, continuous growth from SaaS, commerce, ride-hailing, and financial services. I mean, this is a company, although only $3 billion in market cap, it's a company that is growing quite quickly and profitable. Yes, there are some headwinds, but I do believe that in the long run, the headwinds will turn into tailwinds. Looking at gross profit here, quarter over quarter growth in the different geographies. Let's first start with the big hit. So Mexico is down 15% quarter over quarter. They say here higher growth from tier 0 merchants coupled with a shift in payment mix. For Brazil, that's down 4%. Also here, lower take rate from ramp up of the standalone payment orchestration option launched in Q3 and shift in the payment mix. Now, when talking about take rate, they said that they are focusing now on growing TPV. They think that a decreasing take rate, which did decrease this quarter, so maybe that's also one of the reasons why the stock is down. They thought maybe take rate would stay at 1.2, it's now at 1.1%, but they're really focused on growing TPV. They think that growing TPV faster will offset the small hit in take rates. And to be honest, this is what we're seeing so far. Now, where do we see improvements is in Argentina, up 37%, positive performance in multiple verticals, including commerce, ride-hailing, and SaaS. Nigeria up 37%, Egypt up 30%, Chile up 12%, and then other Asia and African countries up 5%, with other LATAM down 1%. So, I mean, all in all, it's not that bad. Of course, the fact that Brazil is the large part, then yes, you're going to take this type of hit, which you can see right here. Brazil is down and Argentina is also down year on year, although the last couple of quarters it's been up and down, but we are trending in the right direction. Mexico is up, Chile is down a little bit, other LATAM is up, so all in all, gross profit is down year on year for Latin America. For Africa and Asia, that's actually up quite a lot, thanks to other African and Asian countries. Egypt is up nicely, Nigeria is up a tiny bit. And this is basically it. When we look at net take rate, as you can see, we went from 1.2% to 1.1%. They said the following: net take rate reflecting market dynamic of higher volumes driving lower take rates, increasing payout shares, and depreciation of emerging markets currencies offset by cost efficiencies and growth in higher take rate markets. They also expect to grow in those higher take rate markets. They are also expanding their licensing portfolio. More specifically, they got one from the UK as well, and that's going to be a good thing in the future as they continue to grow. They see this as one of their competitive advantages. Now remember, last quarter we've seen that adjusted EBITDA continues to go up, so that's fine, and it's the same thing here for this quarter, but they say that they are resuming strategic investments in core areas to drive efficiency and future growth while maintaining their lean and disciplined structure. So they're still investing in the business, which probably means that, well, on the profitability side, they could be doing better, but as they've been telling us for the last 12 months or so, they're investing, they're willing to take a short-term hit for long-term profits. Now, by the way, they're not going to provide anymore the medium-term guidance because of all the fluctuations in, well, emerging markets currencies, so we're not getting those anymore, which, to be honest, makes sense. There's no point in providing midterm guidance if there are, well, so many uncertainties. Moving on to net income. So net income for the quarter increased 11% quarter over quarter and 4% year over year. They said the following: solid net income quarter over quarter comparison explained by positive non-cash mark-to-market effect related to Argentine bonds and lower finance costs, partially offset by higher taxes, which you can see here on the side. So again, this is a fast-growing company that is already profitable and also investing in their business for future growth. Now, if we look at full year 2025 outlook, I mean, TPV is expected to still grow between 35 to 45% year over year, which means 40% growth at the midpoint, which is very, very good. Revenue, midpoint growth 30% year over year. Gross profit between 20 to 25% year over year, and adjusted EBITDA at 25% growth at the midpoint. So again, this is, to me, this is not bad at all. Markets were probably expecting a little bit more, but then again, if I look at this guidance, this is still quite good. And they say it here: over the midterm, we will seek to maintain strong TPV growth and manage declining take rates through growth in higher take rate new verticals, natural mix shift towards higher take rate frontier markets, and new revenue streams. So I don't know what the market wants to see from the company. Maybe they don't like the uncertainties, but then again, I mean, this is a company that's dealing in fintech in emerging markets, so it's to be expected. And then the last thing here is when we look at top 10 merchant revenue and concentration. So share of total revenue is back to 63%. We were 2 quarters at 62%. Now we're back at 63%, still less than the 68% from a year ago. So okay, at least there's that. When you look at NRR here, it's at 106%. I believe last quarter was 110 and 2 quarters ago was 100%. So still good on that front. And so right now, if we look at the stock, well, it does seem like currently after hours, the stock is at $11.37, which is really just on that 200-day moving average. Let's see what happens on Friday. Of course, if Friday the overall market is still red, I believe we have some macro data that is supposed to come out as well on Friday that could dictate, well, whether or not this stock really goes under the 200-day moving average, or we are starting to see some, well, buying action after the market opens. But this is, of course, on a technical, crucial to stay over that 200-day moving average. From a business perspective, what is crucial is for them to continue to grow, continue to take wallet share, continue to expand the business. And then eventually, I really don't see how they're going to be a failure as an investment. Of course, I'm biased since I own it. But again, at $3 billion, growing this quickly, still profitable, growing in, well, growth markets actually, I fully expect this to be a successful investment for me. Of course, I would have loved if the stock would be up 20% and not down 18%. So we'll see. Unfortunately, I'll have to wait a bit longer for that investment to become really a successful one. But as long as the business continues to do what it should be doing, I will not be complaining other than complain that the stock market doesn't get it. But then again, we've seen that happen in the last couple of weeks quite a lot. Good earnings report, bad stock reaction, not so great earnings report, well, suddenly the stock doesn't move much or it's going up. I mean, Nvidia prime example, stock is down 8% after another blowout quarter. We've heard comments from Meta that they're investing God knows how much in more data centers. I mean, Sam Altman said that they're running out of GPUs, so they're going to need more. This should all be very, very positive for a company like Nvidia, but right now the market is focused more on macro, and that should be an opportunity for us long-term investors. So all in all, that's about it. Do share your thoughts down in the comment section below, like, subscribe, do all of that, and I'll see you all in the next one. Bye-bye.